The Newsday continues here on One News Now. I'm Danny Laurel. The country's dollar reserves rose to a 6-month high at the end of January. Data from the Bangko Sentral showed that gross international reserves, or GIR, increased by 3.7% to $99.7 billion. That's from $96.1 billion as of the end of December. The Bangko Sentral says the month-on-month increase was mainly due to the net foreign currency deposits of the national government with the Bangko Sentral, which included proceeds of its global bond issuance. The government raised $3 billion from its second issuance of global bonds last month. Bangko Sentral Governor Felipe Medalla believes headline inflation most likely peaked in January after the Consumer Price Index rose to a fresh 14-year high of 8.7% last month. However, Medalla says he cannot rule out, quote, another supply shock that may affect prices moving forward. The BSP had earlier said that it remains focused on bringing inflation back to the government target and stands ready to adjust policy settings as necessary to anchor inflation expectations. The central bank expects inflation to average 4.5% this year before easing to 2.8% next year. Now, on the first day of his 5-day working visit over in Japan, President Bongbong Marcos tackled strengthening collaborations between the Philippine government and Japanese companies. The president touted Japan's numerous assistance to the Philippines during a dinner meeting with Japanese firm Mitsui and Metro Pacific Investment Corporation last night in Tokyo. The president pushed for a stronger working relationship with Japan's private sector in terms of trade and investment. The chief executive said revitalizing these partnerships will help drive economic growth in the country.
We can point to so many of the developments that happen in the Philippines with the assistance of the different Japanese funding agencies and government-to-government arrangements, commercial arrangements. And these have been to the benefit of both our countries. And we look forward to the discussions that we will be having here for the next few days, as we have very much...
Now, while the president and our own boss MVP are, of course, enjoying the best food over in Japan, back here on the home front, it's trading as usual. Here to chat about the latest earnings and acquisitions, we have with us Aaron Sy, market consultant over at First Metro Securities. Good morning, Aaron.
Hi, good morning, Danny. Thanks for having me.
All right, Aaron, I wanted to kick off now with a specific sector here, which is the telco space. This on the back of Globe posting their 2022 full-year results. So net income up 46%. And, you know, they were saying that that's on the back of the highest, second highest in Globe's history of mobile revenues, public mobility, bringing that back. So people back on the road using their data. Give us an idea of, is this, you know, better than expected? And what is the outlook for 2023 with regard to mobility, using data, using broadband internet?
Well, the headline, the headline increase in the earnings of Globe has been very good. No? Again, increasing by more than 40%, no, for the reported net income. However, no, we saw that the top line, the revenues are fairly flat, no, and we can actually see it is actually reflected in the negative growth in the core income measure. So I think moving forward, I think the demand will definitely be there. No, however, as we know, there are some regulatory constraints. No, again, we do have the possible dampening effect, no, of the SIM card registration law, no, and of course the growing competition within that space. But nevertheless, I think the mobility, the mobility of the improving mobility of the population moving forward should somehow increase again, no, the demand for the mobile data, no, use, no, rather than the fixed line, which is essentially took off, no, when when everybody or most of the population are working from home.
Oo nga, so you know, it's always been a two-way or two company race here, diba? Work from home, you use the broadband, and then once you go around, you use the data, which Globe happens to be also very good at. Now, tell us about this capex situation. They gave a capex guidance of $1.3 billion. It's 30% lower year on year. What does that mean for you when it comes to their prospects?
Well, I guess the capex, no, as I think this trend, no, might be expected of companies moving forward, no, especially if they are faced with possible lower growth in revenues, no, and of course, couple that with the possibility of incurring more interest expenses now from their borrowing. So I think at the very least, no, companies like Globe, no, would recalibrate, no, their capex spending moving forward. Maybe prioritizing more on those projects that would give them more free cash flows, as opposed to those that would be just nice to haves.
Okay, can you compare that or juxtapose that with PLDT's budget overrun? They fell for a third straight day yesterday. There are lawsuits being filed in U.S. district courts. One complainant is saying PLDT needs to pay for the investor losses that happened because of this disclosure. Is this a real concern for you, or are investors still looking at the fundamental business of PLDT and clouding, let's say, this fiasco?
Well, I guess over the long term, no, I think the fundamentals of the business would still prevail, no, over the current controversies. But of course, as investors, we need to be on guard, no, of our investments. Definitely, those so-called, no, as of now, no, allegedly cost overruns would have an overhang, no, on the sentiment at the very least, no, of the market towards PLDT. But again, I think the leadership of PLDT has been there. The resurgence of PLDT against against Globe, no, has been, I think, no, successful in the recent years. No, as we know, the PLDT has long been the leader in the fixed and mobile space. No, but then again, there was a time that Globe, possibly mostly because of the legacy system of PLDT, has overtaken PLDT in that space. But then again, we saw PLDT again resurge, no, to be the leader to that space. But again, the cost overruns, I hope, as claimed by so far, no, by management, has been deployed, no, at the very least to the infrastructure, or to better, no, the infrastructure of PLDT, which we do believe that is very crucial, no, especially in this very competitive phase in the environment in telco.
Has this been priced in already in the stock, and what are investors expecting when it comes to the fourth quarter or full year of PLDT, and even this year? Is the income or the bottom line going to be affected because of these overruns?
Well, definitely, I think again, sentiment-wise, I think the adjustments that we have seen when the stock dropped very steeply, when that news came out, has already been has already discounted, the full impact and maybe more, of that 40 billion cost overrun. So as for profits, that cost overruns, as they have disclosed, are for capex, which again would be reflected moving forward into depreciation expenses as they are used. So we do expect that the expenses would be higher moving forward, if this capex have been financed by using debt, and again, as we see we are in a higher interest rate environment, then we can see finance charges becoming higher moving forward. So I think these factors would definitely cause cost to increase for these companies, especially those who have been jacking up their capex spending. But again, as far as demand is concerned for their services, definitely there's still demand for their services. I think robust growth can still be expected from both the fixed line and the mobile, especially the data. But as far as the net profit is concerned, I think it would depend on how the mix would turn out to be. As we know, the margins are different for different kind of services for telco.
Okay, let's move on to Axellum, a part of which is being bought out by MPIC, or at least in the process. There was a trading halt which will be lifted at 10:30 a.m. today. But before this trading halt was put in place, we saw the stock, I think, go down by as much as 4%. Give us an idea of why this happened. After it was still trading after they gave this disclosure, and what it's going to be looking like at 10:30 a.m. today.
Well, definitely, the stock has been battered, since IPO. It has been one of the controversial IPO stocks, that has fairly performed well in its early days, but then again, just continued dropping, after that good showing, in its debut.
Why is that, Aaron?
Sorry.
Sorry, why is that? Why is that? Why did the stock perform badly? This is even before pandemic, no?
Yes, I think it has something to do really with, for me, I think it has something to do with cash flow generation for the company.
Okay.
It is very commodity driven, and I think as far as their business is concerned, while they are earning, the prospects really are not as big as those IPOs that came after it. So again, the Axellum is earning money. It's actually a good company, but not as exciting as the IPO frenzy suggests it to be.
Okay, and then your thoughts on this sale or purchase of MPIC and how that would move the stock price.
Well, for Axellum, definitely it would be a good a good sentiment booster. As we know, mostly when stocks are being purchased, mostly the acquiree, the acquiree gets the boost on the share price, and vice versa, the acquirer naman would have
Correct.
some parang buyers first, yes. But again, for us, these are temporary. So if you have Axellum, maybe it would be a good time to at least trim your shares, and just don't forget that there are a lot of people who might be stuck still, in this stock, and might find it in their best interest to at least trim down their position and maybe realize some losses from the IPO.
Okay, interesting. And before we let you go, let's check in on the index, Aaron, this morning and how it's doing. Still on the downtrend, actually, after we were already, trading above 7,000 levels here. Are there new risks to be taken? And can we say, unfortunately, that this initial bull run that we were experiencing in January is now at a halt?
Yes, well, as I see in my charts, I think the PSCI is in a critical juncture now. Again, as you said, it's still in a downtrend. And if you look at if you zoom out the stock and you look at the broader perspective, we are actually trading along the downtrend line that started in January 2018. So I think there is really a case for profit taking now, especially that the macro factors, namely the US dollar, the peso to US dollar, is somehow taking a breather, from its quite steep appreciation, from breaking the all-time high in fourth quarter of 2022. So I think from where we are now, we really had good gains in January. So I think it would be prudent, to at the very least take some risk off the table, realize the gain, and wait for the pullback.
Very interesting points there. Thank you so much, of course, Aaron Zai of First Metro Securities.
Thank you, Danny.
On to some tech news. Investors have yet to embrace using AI and their intelligence in their investments, and few believe their own jobs are at risk. Scarlett Fu has the highlights from the latest MLiv Pulse survey.
Is AI coming for jobs in the financial sector, potentially making traders and portfolio managers obsolete? Yes, is the overwhelming response, according to a Bloomberg survey of professional and retail investors. But more than 2/3 of respondents are confident their own jobs are not at risk anytime soon. While artificial intelligence has been in development for decades, there's now a new wave of interest in the technology, with ChatGPT making headlines. Still, few market watchers have used any kind of AI to help them invest, and the majority isn't even considering it. And just under half say they plan to buy stocks that have exposure to generative AI, which is tech that can create things like art and text from simple prompts. If anything, investors may be waiting for the stock market to fall further. Their average forecast is for the Nasdaq 100 to slump to 12,000 by year-end. As for big tech itself, many of the companies now slashing jobs are also the ones sinking billions of dollars into building their AI capabilities. Look at Microsoft. It announced a $10 billion investment in the developer of ChatGPT just days after laying off 10,000 employees. And Alphabet, which cut 12,000 jobs globally, devoted time on its earnings call to about how it's always been an AI-first company.
For more updates, visit News 5, the Philippine Star and Business World online. Visit our website, onenews.ph, for more in-depth analysis. You can also catch One News on the Signal Play app. Register for a free account now. That's at www.signalplay.com and stream One News Live anytime, anywhere. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.